Hi, hello, good evening. Welcome to Adhyapana Academy. The concept for today is working capital management. Let's get started. Working capital management. Right. So, capital is the money required for starting a business. That capital can be classified into two. One is the fixed capital, which is the long-term capital, and the other is the working capital. What is fixed capital? For example, if it is a manufacturing concern, if the business is a manufacturing company, investment in machinery will be the fixed capital. Investment in machinery will be the fixed capital, which means what is working capital? Can the machinery run on its own and produce goods? No. The money required for operational activities of the business is what we call as working capital. So, the investment in terms of raw material, when it later gets converted into WIP, then it gets converted into finished goods, then it goes to the hands of debtors in case of credit sales, the lock-in period of money from cash to cash within a short period of time is what is called as working capital investment. So, fixed capital is long-term investments, whereas working capital is short-term investments. So, fixed capital is long-term investments. Working capital is an investment for less than a year. That is why it is short-term investments. Okay. What is this working capital I told you? This working capital is the money required for operational activities of the business. What is the operational activity of the business? When I purchase and install a machinery in my factory, it will not produce on its own. I have to purchase raw materials. I have to pay the laborers to handle the raw materials to get converted into finished goods. After producing the finished goods, I have to store them properly. And if I'm going to sell it on credit, there comes the debtors. And later I will realize the money from the debtors. That lock-in period of capital is what we call as the operating cycle or the working capital cycle. So money required for operational activities of the business is what we call as working capital investment. This working capital is measured as current assets minus current liabilities. You might have studied right from your 11th standard, assets minus liabilities is capital. So current assets minus current liabilities is what we call as working capital. Is what we call as working capital. Okay. So this working capital, just a minute. Suddenly. Right. So working capital is current assets minus current liabilities. What are all the current assets? Current assets is stock of raw material, stock of WIP, then you have stock of finished goods. Then you'll have the debtor holding period, which is the debtors, which comes in case of credit sales. You will have cash balances. Then you will have prepaid expenses, if any. All these are current assets. When it comes to current liabilities, it can be creditors for raw material. Then it can be the bank overdraft in case of any overdraft balance, in case of outstanding expenses. These are all the possible current liabilities, right? So, while estimating the working capital, if they ask you for gross working capital is the total of current assets alone. Gross working capital is only the total of current assets. Net working capital is current assets minus current liabilities. Sometimes there may be certain provision for contingencies which must be added to the net working capital to know the working capital requirement. So, the working capital required is net working capital plus a provision for contingency. It is optional. That provision for contingency or the safety margin is left to the discretion of the company. It is optional. Okay. So what is this working capital cycle? Working capital cycle is the operating cycle which is nothing but the cash to cash cycle. Let me classify the companies into two now. One is a trading concern and the other is a manufacturing concern. For a trading concern with cash, you invest the money directly into finished goods. This finished goods, when sold on credit, moves to the hands of debtors. This debtors will realize into cash once again. In case of a manufacturing concern, cash gets invested into raw material. That raw material gets converted into WIP. That WIP gets converted into finished goods. Finished goods, when sold, moves to the hands of debtors. And finally, it realizes into cash again. So this working capital cycle or the operating cycle is called as a cash to cash cycle. The time taken for cash to get converted into cash again is what is called as the holding period or the working capital investment period. It is less than 1 year. Okay. So how am I going to estimate this working capital cycle? This working capital cycle is measured as current asset holding period minus current liability payment period. How are we going to measure this current asset holding period and current liability payment period? It is an inverse of the turnover ratio. You might have studied under ratio analysis about turnover ratios, right? So let me explain about the current asset holding period or the current liability payment period is nothing but the inverse of turnover ratio. Let me give you an example. See, coming to stock turnover ratio. Coming to stock turnover ratio for raw materials. What is the formula for stock turnover ratio of raw materials? In whatever is the turnover ratio, turnover appears in the numerator, right? So it is cost of raw material consumed, which is the turnover in case of stock turnover ratio. In case of raw materials, cost of raw material consumed divided by average stock of raw material is what we call as stock turnover ratio for raw material. So just an example, if I say the stock turnover ratio is 4 times, turnover ratio is always represented as number of times. So if I say the stock turnover ratio is 4 times, it means the stock is replaced or the stock gets restocked once again, once in 3 months. How did I get once in 3 months? It is 12 divided by 4 times, which means once in 3 months, the stock is getting replaced, right? This 3 months is nothing but the holding period. Okay, this 3 months is nothing but the holding period. So how did I find this 3 months? It was 12 divided by 4. What if you want it in days, you can write as 365 divided by 4. 12 is for months, 365 is for days in a year. Okay, so if for simplification, I am taking it in terms of months. So what am I doing here? If I have to represent this turnover ratio in terms of time period, that period is what we call as holding period. That I find it as 12 divided by 4, 4 times in a year. 4 times in a year now, once in 3 months, correct? So what is happening here? It is 12 divided by, what is that 4 times? That 4 times is cost of raw material consumed divide by average stock of raw materials. Right? So what happens here? 12 divided by cost of raw material consumed, divide by average stock of raw material. When you are dividing a number in the denominator, when you take it to the numerator, it will reciprocate, right? So it is average stock of raw material divide by cost of raw material consumed into 12, which will give me the stock holding period of raw material. This will give me the stock holding period of raw material. This is nothing but the inverse of turnover ratio. What did you do in turnover ratio? You had the turnover in the numerator and stock in the denominator. Here you are having stock in the numerator and turnover in the denominator. It is based on the simple logic which I just showed you. So this is stock holding period of raw material. Coming to stock holding period of WIP. Stock holding period of WIP is 12 divided by cost of production. When it is WIP, it is cost of production divided by average stock of WIP. So what will happen when you bring a number which is divided in the denominator to the numerator? It will get reciprocated. So it is average stock of WIP divided by cost of production into 12. Right? Then comes the stock holding period of finished goods. So for the stock holding period of finished goods, it is 12 divided by cost of goods sold divided by average stock of finished goods. Okay, va? So what will happen? It will, the stock holding period will be average stock of finished goods, average stock of finished goods divided by cost of goods sold into 12. Right? Then coming to the debtors collection period. Debtors collection period is 12 divided by debtors turnover ratio. What is debtors turnover ratio? It is credit sales divided by average debtors. Right? So here the debtors collection period will be average debtors divided by credit sales into 12. Likewise, for creditors payment period, coming to current liability holding period, current liability payment period, creditors payment period. Creditors payment period is 12 divided by credit purchases. Whatever I am writing in the denominator is the turnover ratio. Turnover applicable to that particular item will appear in the numerator for any turnover ratio. When it is raw material, it is cost of raw material consumed. When it is WIP, it is cost of production. When it is finished goods, the turnover applicable is cost of goods sold. Debtors, credit sales, creditors, credit purchases. So whatever is the applicable turnover will come in the numerator, and the denominator will be the value for which you are finding the turnover ratio. So here it was finished goods, so it is stock of finished goods. Here it is debtors, so it is average debtors. Now here it is average creditors. So creditors payment period will be average creditors divided by credit purchases into 12. So as I already told you about the working capital cycle or the operating cycle, it is the time taken for conversion of cash into cash months again. So that working capital cycle for a trading firm is smaller or lesser than the working capital cycle of the manufacturing concern. Why? Because in trading concern, it is direct investment into finished goods. In manufacturing concern, the money is first invested in raw material. It takes time to get converted into WIP, then gets transformed to finished goods. Then in terms of credit sales, it moves to the hands of debtors and gets converted into cash. So it is a much lengthier process when compared to a trading concern. So the holding period of working capital is more for a manufacturing concern than for a trading concern. That working capital cycle will definitely be less than 1 year. It is only a short-term investment, right? So here this working capital cycle is measured as current asset holding period minus current liability payment period. So whatever is the formulae I explained, you will find the values for those formulae and substitute it to find the working capital cycle or the holding period of working capital. I hope this video was useful to all of you. See you all soon in another video. Thank you.